Hello there, guys. Give it a few minutes as usual before we get going. Some interesting moves happening at the moment. Had that US CPI data come through, so we will discuss that in a minute. Hi, Vincent. I'm good, thank you. Hope you're doing well too. Hi, Ian. Thanks for joining. Hi, Cal. I hope you're doing good. As always, guys, let me know if there's any charts of interest you want to take a look at. I've been very Euro bullish this week. If you watched the week ahead analysis video, we did discuss the... One second, let me just bring up the currency strength meter. We did discuss the fact that the euro is the strongest currency at the moment. So I've been looking to see if there's any advantages to looking at that. I've been euro kiwi long this week, euro yen long from last week. So yeah, that's doing okay at this current moment in time. So we'll see if that can continue, or whether we're going to get into that potential reversal kind of setup, which is something that we obviously discuss as well whenever we come into these type of events where the currency comes into a sort of high on the strength meter. We can often see it reverse. For example of that, obviously the US dollar had been really strong for a period of time. That's now starting to sort of fade a little bit. For instance, down here, the New Zealand dollar was weak and then it gained some strength, came into the reversal zone and then it weakened again. So yeah, euro kiwi has been one I've been watching, simply because euro was the strongest currency, up at +5, and kiwi was the weakest one. So I always want to try and pair that strength against weakness together. So euro kiwi is always something, was something to watch going into the early stages this week. So we can have a little look at that. The pound hasn't been doing too bad either. The pound is the orange one, which is just the second strongest currency at the moment. So yeah, I do quite like the pound as well against some charts of interest. So we will go take a look at some pound charts. I know some of you like to look at sort of pound Aussie, pound Kiwi, things like that. So yeah, we'll go take a little bit of a look at that as well. So let's kick it off with euro dollar. I guess we've got to kick it off with the data that's dropped, because it was quite significant in terms of the CPI data. We'll just zoom in here. We saw that the US CPI came in at 0.2%, down from the 0.3%. We saw CPI month on month come down from 0.4% to 0%. So that's quite a significant drop on CPI month to month. And CPI year on year closing in on that sort of 3% area that the Fed have been looking at. So nice to see that kind of coming down. And I think that helps to kind of support that US dollar weakness that we're seeing in the market. And that can be seen here on euro dollar for one. But one chart that we did talk about last week was dollar CAD shorts. And we were looking to get shorts in and around this area just through here. So I managed to actually jump on a couple of short positions as price came up into this key level of resistance. We pointed out the one spot 38.40. Let me just get rid of this box for a second because I'll break this down as to kind of why I was looking at this area. So first of all, let's start on the weekly chart, and we were identifying areas on that weekly chart to find some support and resistance. And we came into this weekly level up here at the sort of one spot 39.30. We rejected. This was the prior week, so this was the week of the 29th of October. And when we saw that bearish engulfing candle, it kind of alerted us to there could be some potential rejections coming in here with the potential for a continuation to the downside. So when we saw that, we identified the next level of resistance, which happened to be up at this 138.40. So let me just zoom in again so you can see that. And I basically got that level from this wick in here. Okay, so this is what I was looking at the time. Price had obviously consolidated in here. Okay, so we know that consolidations are where volume tends to pick up. Okay, so there'd be sort of a volume level through there. We then broke to the downside, came back up again, nice little wick, but look at the selling that followed after that. Very aggressive selling, and it came all the way down into these swing lows down here at sort of the 136 level. So after that week, I was looking for areas to get short, and the thing for me was definitely up at this 138.40. The reason being is because we kept breaking through other barriers as well. So I would have been looking at this area here, but we traded straight through it, so negated that level of resistance. And then it was just about waiting for this 138.40 level to come in. I did try and take an early short off of these highs, okay, because I thought that at this point we were getting a bit of a rejection. But I got stopped at break even on that particular move. So wasn't too bothered by that, but I thought that would have been the move. And then I just waited for this 138.40 level to be the one to kind of come into play. So I ended up getting short twice off of that zone in there. And yeah, that worked out really nicely. Two shorts basically from the 5-minute time frame. I'm a big believer of looking at these key levels of support and resistance and then identifying sort of changes of trend at those types of areas. So you can see prices still making higher highs and higher lows. So my actual first trade came when it broke the extreme, because I thought, well, if price is breaking the extreme and then it sells back through it, I can try and get short there. So that was my first short. My second short came after price traded through to the downside. So this was the low. Price traded through the low. We then continued. We made a lower low, lower high. Okay. So once price did that, I was looking to basically see where that lower high would come in for an opportunity. And I basically looked at this level in there and ended up getting short around here for a move down into these swing lows. So that was nice. Also on the hourly time frame at the time, there was a 50 moving average running through there as well, which was sort of my target area as well. And since then, price then went sideways, but you can see that level kind of acted as resistance again going forward. If I just kind of zoom it over a little bit, that same zone was an area of resistance again. And we've started to see price now trying to trade through all these kind of lows now. So it'd be interesting to see if we can get this continuation here on dollar CAD and push that price a little bit lower here. It's definitely a dollar dominated move. Let's go check out the dollar index. You can see trading lower here. Our fear from last week was the fact that the dollar index actually closed bullish again, back above the 105.50. But we know as well in the sort of mid to end of November, we get a sort of US dollar weakness shift when it comes to seasonal reports as well. So if I just bring in the seasonal reports here, let's go take a look at Equity Clock. Again, this is a free website for those that are looking to just kind of expand your knowledge a little bit on seasonality and stuff. I'll post it in the chat box. So if you're on YouTube and Facebook, you'll be able to see that chat appear, so you can kind of join me on doing this. So if I bring Equity Clock down, you'll be able to see this. Basically, you've got all your indices, your commodity futures, index futures. You want to click on US dollar index futures. And yeah, this is November. Okay, so we can see that there's usually a top in the market in November. And this is what could be playing out right now, this potential move. So we could be bearish now on the US dollar through the end of November to December, until the end of December. So that's definitely something we have to consider going forward. Let me know if that makes sense so far, guys. Drop a comment in the comment section. Let me know if you're or in the chat. Hopefully that all makes sense so far. Hopefully some of you caught that dollar CAD move. I wonder how gold's performing actually as well, because we spoke about going long on gold. So this was the sort of area we were looking at, and this zone down through here, and we literally just tapped into the zone yesterday, and price started to move back to the upside. So really aggressive move going on right now. I have marked up this level of resistance up here at 1961. I think that's where price is going to go and target. Unfortunately for me, I missed out on this particular move. I had it all planned out, but I ended up not taking a position, and yeah, price has just kind of gone without me at the moment, coming back up into this key swing high here. But this could be the area where gold starts pushing towards that $2,000 level again. The reason why I say this is because obviously the last time we sort of rallied recently, price has moved over 800 pips from in and around this area, so it could do the same again to reach that high essentially. So this is where I'm kind of expecting that price may want to come and retest up towards that $2,000 point on gold. And right now we're starting to get that sort of bullish move. Okay, so this is where I suppose we can start adding in sort of trend strategies, right? I'm a big believer at sort of buying at lows, selling at highs, but also sometimes when we look at the market in a bigger picture, you need to develop some trend strategies as well. So one of those could be sort of your hourly 50 moving average, 30-minute 50 moving average as well. You can see here I've got the 50 moving average is the yellow line, the 200 is the black line through here, and we can see that when price breaches the 50 and closes back above, it can lead to an extension to the upside. So at the moment we've got the crossover for it to be bearish, and you can see how it reacted here. Okay, extended to the downside. Now we're at this large level of support. You know, we're looking for a different move now. So we need to see price probably breach these 4-hour highs of that 1960. Then we will see the sort of crossover of the averages, maybe a pullback and a continuation at that point. So yeah, you've got to develop all sorts of strategies when looking at the markets. And, you know, a moving average strategy can be useful when it comes to trending markets, but only in trending conditions. So you need to always identify your trend first when you're looking at averages. Otherwise, you need to be looking at sort of your highs and lows in the market. And yeah, this is a nice little breakout here from gold. So if you managed to catch the gold video last week, you would have been notified that there was a potential opportunity coming in here. And yeah, so that's moved about 260 pips from that level of support. So we'll see if that can continue, see if it can breach those highs. Vincent, pound Kiwi. Yeah, we're going to take a look at pound Kiwi. Guy, good morning. I hope you're doing really well. Thank you for jumping on the live stream. Yeah, let's go take a look at pound Kiwi. I think this is something we had to look at last week, actually. I like the idea of being long. Might have been Euro Kiwi, actually. We were looking at longs up into this level of resistance. So looks like a nice area to take profits there. Right, let me just bring in. Let's have a look. Pound Kiwi. Definitely seen a little bit of a shift more into a bit of risk on just now because of that data drop from the US. Most likely because the Federal Reserve is probably no longer going to hike interest rates further. So the market is just kind of taking that in at the minute. Let's go have a little look at pound Kiwi then. So obviously it's been pretty much in an upward trend all year. We've had this kind of rejection here. Let's have a little look at the daily charts. So this would have been a nice area to look for either, you know, some taking of profits or some selling opportunities, I think, on pound Kiwi. Because of strength and weakness, I probably would have been more on the side of being long this market, but I definitely wouldn't have been long into these swing highs. So this is the 20950 level. strong level of resistance. We know that strong level of resistance because we can see the two reactions that have happened here recently. So if price is getting nearer to that level, you don't really want to be in it. The reason being is because if I was going to take an entry around this level, the safest place to put my stop losses are going to be down through here. And the risk to reward ratio at that point is just non-existent. So your stops would be very, very vulnerable in places like that. So let's say you did want to be sort of long in this market for whatever reason, whether it's strength and weakness based or anything like that. I'd want to try and find levels where buyers have stepped in the past. So the clearest level so far is down through here. Okay, let me just zoom in a little bit so you can see that a bit better, which is somewhere between this sort of 206 level. Okay, so let's mark that one up. Let me know as well, guys, if you can see all the labels. Okay, I can make them a little bit bigger. So we're kind of trading between these 2 points at the moment. Okay, found resistance, support, a little bit of support, back into resistance here. So if, let's say, Kiwi starts to strengthen for whatever reason, and pound has found that little bit of weakness at the moment, price could come all the way back down into this zone of support. Okay, and then it's about watching those chart patterns again on your lower time frames. If we breach these highs, let's say this is just a reaction to the news, and then we get a little bit more of a sort of continuation of the recent developments here, then I'd just be looking at other structure points. So I can see obviously up here is a decent level of resistance. This was the highs that formed in September. We obviously had a very big downward turn at that point, over 1,000 pips to the downside. So this, to me, would be a good area to start looking for price to come into if it did breach above those 2.095 highs. So I like to round things up or down depending on where we are. So 84 probably come down to 375, just to add that quarter number in there. So yeah, that would be an interesting level for me if and only if price either found support here or breached and found support at these kind of previous swing highs there. At the moment, we're kind of trading within this level, so I think more likely a move to the downside here is looking more likely at the moment. But let's go take a look at that 4-hour time frame. We can see that we're obviously rejecting in here. We can tell that the market is in a range as well. Just look at the averages. We've crossed over, okay, but then we keep crossing sort of in between each other, okay. So it's showing us here that the market is in a range. We don't need to kind of jump into anything at this point. I would just be looking at key areas. I mean, down here could be quite interesting, sort of the mid-range, because obviously price has found some resistance at that point. So maybe if we came into here, you'd get another rally to the upside. But in a ranging situation, the best thing to do is look at your highs and lows, okay? So when a market is in a range between 2 points, the best thing to do is to wait for the price to come to the low or to the high and make a decision at those points. So I think waiting for a move down to here is pretty sensible. Or if you want to be short this market for whatever reason, and price comes back in and forms like maybe a double top pattern with a bit of divergence, maybe some divergence from your stochastic or something after price makes a new high, then you've got those type of ideas that you can look at that point. Sorry, Vincent, let me just come back to your message. Looking to get long from last month's value area high around 2079 on the H4. So yeah, that kind of high there, that value area high obviously then coincides with this kind of cluster of highs as well, doesn't it? So yeah, I like the idea of potentially price coming into this point. It's just that when a market is in a range, the more sensible thing to do is wait for it to kind of either breach the highs of it or either sell from highs, buy from lows. That's the sort of theory behind range trading. So I like the idea. Like I said, the currency strength meter is showing pound as a stronger currency at the moment. This orange line through here, Kiwi, is the yellow line towards the low of the strength meter. So in retrospect, I like the idea of being bullish in this market, but then the technicals have to line up, right? The technicals have to also line up with that theory. And at the moment, that there is the more sort of sensible choice, I would say. Around about 2.06 would be that level for me at this current moment in time. Hey, Justin, good morning. I hope you're doing well. Let's have a little look. Pound yen's flying. So pound yen was a market we looked at as well last week. I like the idea of being pound yen long. I really like the idea of being pound yen long, to be honest. And we can see that price has obviously breached this 186.50, which is interesting because I bailed out of positions here at this point and missed out on 125 pips there. So, but that's okay. We'll live to fight another day. But yeah, that was an area we were looking to target from last week. I think it was the previous week's week ahead analysis. We looked at price targeting this level. And we had this nice little kind of consolidation. This is a perfect example of a sort of trended market. So we had a bit of consolidation here. We broke through the range highs. And I was looking to see if price traded through the range highs, where are we going to expect price to go to? And one of those areas was the 186.50. Now, this is where you can start to implement sort of trend-based strategies after that in order to try and kind of like get involved in the market. So here you can see I've got the hourly chart. I've got the 50 and the 200 moving average on. Look what happens to price when we kind of break back through the average, close back above. We have that extension to the upside. We come in, trading around the average, we breach it, we rally back into those highs, yet we stumbled back. And if I was kind of looking at this from a trend perspective, this looks great. But if you like trading from highs and lows, there's options to do that as well. So you've got this low in here that gets a double bottom, all these lows through here, price tests and rebounds from it as well. So there's always, like I say, there's multiple ways to kind of get into the market. And these two ways would have worked out pretty well. Trading from the lows in here, for instance, or this one and this one would have paid off pretty nicely in this kind of scenario here. So yeah, that's doing pretty well. Let's go check out Euro Yen. I really like the idea of being long Euro Yen as well. I don't have the information to show you here on this particular chart at the moment, but there is a very, very high volume, or say high volume level. It's a level of resistance all the way up towards the sort of 168, 169 level, which at the moment is around about 500 pips away. At the start of the week, it was around about 700 pips away. And obviously price is moving to the upside here. So Euro Yen could be one of those markets that continues to trend trade. And yeah, I've been long since this 30-minute area in here. So I looked at price come into the averages, break back above it. I ended up going long, stop loss below the 200 moving average, and then price has continued to push higher. So looking to see if that one can continue to rally as well. Obviously here, really good sort of trend trades and opportunities. Yesterday was a bit of an interesting move. That was when dollar yen came up into those swing highs, and I think a lot of people were looking at potential intervention, but it wasn't. But it will bring me on to sort of dollar yen. But yeah, Euro Yen flying at the moment, and this could continue to push for a while. And sometimes when you see a trended market like that, it's always good to kind of jump on. But let's go take a look at dollar yen. We've come down into that sort of 150 support now. Obviously, the market is at a really interesting point. If we look at it from a monthly perspective, we've come up into the 2022 highs now, around about that 152 level. And we're starting to see a little bit of kind of resistance coming into play. This is the kind of outlook on a weekly chart. And then if we look at the daily chart as well, it's quite interesting because we had sort of an aggressive rally into that sort of 152 area, or the highs of 151.80. We've then had quite an aggressive sell-off coming into play, but then it only found support back at the swing lows. And then the kind of approach back up to these swing highs has been quite laboured. It's not really been as aggressive as, let's say, this candle in here, for instance. I felt like as we kind of approached that high volume candle high again, we've just had this very sort of shallow move back to the upside. So I wasn't surprised when I saw yesterday that we did get a little bit of a sell-off there. So if you look at the hourly chart, we ended up breaking it up towards the 151.88, and we rejected to the downside. Now, I was looking for more of a retest of this level before trying to get involved with any $100 yen move. So I didn't get involved with this, but there's that sort of breach of lows through there, very slow sort of sideways movement. And then the news has obviously been the driver that this market was looking for to breach that sort of 151.22 low. And now we're in the 150.80s. So I'd imagine we'd get some kind of pullback here, maybe a move back up into 151.22 perhaps. We can see obviously buyers have stepped back in a little bit at these 2 points most recently. If we go take a look at a 5 minute, probably got a little bit of price action going on here at the moment. So yeah, could be some potential backup. There's been some selling back at 151 again, but 151.20 was that previous resistance level. So you know, we'll see what happens to dollar yen next, whether we get a push all the way back down to the 149.26. That could be something to watch out for. Yen's just very weak at the moment. So I think maybe when you get these kind of sharp sell-offs in yen, or in dollar yen in particular, we're starting to see a little bit more of buying coming back in. But the dynamics shifting on the dollar, isn't it? We're starting to get a weaker dollar. So maybe a bit more of a range-bound market. Could see price move from the swing highs down to the swing lows from a daily perspective. So, you know, anything into, you know, a breach of these lows would see a move down to this one, for instance. So, yeah, could be a very interesting market to watch. Maybe the Bank of Japan will be a little happier seeing dollar yen more towards the 149 again, rather than being up towards the 152s. Let's have a little look at the volatility index. Yeah, VIX starting to come down again, which would obviously help with that risk-on sentiment in the market. You know, I'm looking for at least 11 on the VIX, really, before seeing that volatility kick back in, which could obviously force that risk-on sentiment a little bit more. Let's go have a look. Where have I put cable? Okay, yeah, nice rally on cable as well. Let's go to the daily time frame on cable. Cable's a really interesting market. We had a lovely rejection from 124. That was a high volume level we talked about in the past. We're obviously breaching 124 now. So we're coming up towards this 125 level, 125.50. If I'm going to narrow this zone down, it would definitely be these kind of swing highs, and I'd probably look more for that 125 level. Could go 125.25. Yeah, let's go 125.25, I think. Something in and around here could be a good area for those buyers at the moment to go aggressive and try and target. We're obviously approaching these recent swing highs as well. So, you know, can price breach this high and continue to move to the upside? It'd be interesting to see if we do start to see some sellers coming in here, because what you might get is a bit of a push down, a continuation, a fail to try and trade through that swing high, and then a move back towards the one sort of 123.40s, which is where we've got the sort of average on this 5 minute time frame at the moment. But that's just going to coincide with this level of resistance here. And it looks to me like this type of data that's happened could push the dollar even lower. So, and that we're breaching these kind of weekly lows at the moment. So really speaking, Where's the dollar index heading to next? Maybe into the 103s, perhaps. I'd be interested if we get all the way down here towards that 90 to that 100 level, or 99.75. Be interested to see if we get anywhere near that. Very close to that level on gold. Very, very close. I just wondered if we'd get like a bearish reaction here at that point for a move back down. Because obviously I do like the idea of being long gold. So I wouldn't mind seeing it come back towards the sort of 4-hour lows that we've put in, or even this sort of hourly lows that we've put in. But whether we get back to there is might be quite a big ask on a market like gold at the minute. And obviously, we've got more data coming up this week, haven't we, for the US? We've got core PPI sales, core retail sales out tomorrow, and PPI. I think if we get more negative numbers there, it's just going to compound that US dollar weakness that we're seeing. Any questions so far, guys? Anything that you guys are looking at as well? I know we had a little look at Vincent's pound Kiwi. Hopefully I've covered markets that you're all interested in this week. There we go, getting that alert now on gold. Refining it down a little. Could probably extend a little bit higher. How much is it? I mean, like a 320 pip move there. I can delete that now. What is the longest time you've held a trade for? It's a good question. I think probably a couple of weeks is probably the longest that I've held a trade for. But it depends what I'm doing. A lot of the times I will try and kind of incrementally add in. Like if I see, like, let's say Euro Yen, for instance, I really like the potential of Euro Yen going quite far. So I will look to potentially kind of add in but hold at the same time. So let's just say, for example, here I got in at these kind of at the 50 moving average bounces, right? One thing you can look to do is just then track your stops above the below the lows, or with like an average like the 200, for instance. So I like to try and get in a first move. Let's say we get into these highs. I like to bank at least 50 to 75% of the position, really. Move a stop loss to break even. And then I've freed up my risk then. And if I've got free risk, I will look to potentially add into a market. So let's say I've added in a gain. My stop loss from the original trade will move up to the original, to the next one I've placed. And then again, if I get to like 2, 3 to 1, I'll bank 50 to 75% of the position, move stops to break even. Don't get me wrong, you get stopped at break even a hell of a lot. But when you do get into the sort of one that does start to trend, it can be quite good. Yeah, I'd say probably max, I say 2 weeks, but that's probably, how long have I been in my Euro Yen trade at the moment? So I got in here. So that has been 4 days so far, which is not a lot really. Yeah, I've been in a trade for about 2 weeks, I reckon. I do prefer not to do a trade for 2 weeks, to be honest. But I have been doing a lot more swing trading than sort of day trades at the moment, regards to futures and stuff. What is your take on discretionary and mechanical trading systems? I think you've got to have discretion, to be honest. I understand the mechanical system behind it and the mechanical element behind it, but I think that mechanical strategies would perform better if it had discretion. So let's say, for instance, your mechanical strategy said to short euro yen and to stay short euro yen at all the resistance levels, but then it just keeps going. You could avoid those losses if you just added a little bit of discretion in there. Obviously, it works both ways, doesn't it? Because sometimes your discretion then keeps you out of a position and then it performs really well. So it works both ways. I prefer discretionary sort of trading, really, because at least then you have a bit more of a reason to get involved. Whereas if you're just purely mechanical, I don't think it benefits you as much, if I'm honest. Yeah, I would be a little bit. I'm more of the discretion. You can have like a mechanical strategy, and just because you've got to have some kind of strategy, haven't you? So technically, discretionary traders will have a strategy. But yeah, I think having the ability to be able to know when to use it is better than trying to just use it for just getting involved. It's very much like what I said. In a ranging market, you don't want to be using the moving average strategy, but sometimes the moving averages will kind of peel apart and it makes it look like there's a trend about to develop, but it's just because the market's at the range highs. So yeah, being able to understand the market, I think, is the most important thing. Always just think of your why. And I always go back to this. I have like a 3-step process at least. But the why do you want to be in that market in particular, is always the top thing that you should be talking about. Why do I want to be euro yen long? Okay, why do I want to be euro yen long? And then build a thesis around it. And if it doesn't make sense to be long, get out of it. Right? I did it the other day. So we've been talking about getting Kiwi Swiss long, right? And I've been so wrong on Kiwi Swiss. So I was trying to. I've been looking at sort of getting long from last week. So we were looking at this, right? This low in here on the weekly. We were looking at the sort of divergence between the lower high and the higher low, right? And we were basically looking to see if this would push towards that 0.55 level, right? Now, strength and weakness at the time was suggesting that this could potentially happen, right? Kiwi was getting stronger, Swiss was getting weaker. So I was very focused on Kiwi Swiss. Now, what I noticed was, if I look at it from a 4-hour point of view, we came into this kind of low area in here, right? And before that, though, I was trying to get long around this area here. I was trying to get long in and around that area. And if I just show you on an hourly, it'd be easier to explain because it actually sets up with a break of the 50 moving average in here. So I've tried to basically go long there, right? Now, luckily, I didn't get triggered in because price just went completely south on me. But then I started to look at it a little bit more and said to myself, well, just because price breaks above a 50 moving average doesn't mean I should get in. But that would be what a mechanical strategy would suggest. So what I did was I looked at my daily chart again. And one of my theories, if I'm going to be trend trading, is I want the daily chart to at least close in the same direction that I'm looking at. So we had a bearish close. Again, it then turned into a bearish close. I had a bullish close here. So when I had the bullish close, then it was time to say, okay, well, this could be the point where we get that higher low and price may want to try and push back to the upside. But we're not really at a level. If I look left, There's not really anything going on at that area. Okay. So next thing to do was I just waited to see how price reacted. And then we ended up getting this whole crossover going on, and price has pushed even lower. So I'm glad I changed my mindset on that. But if I was going to be a bit picky and say, oh well, but my mechanical strategy would have been to buy above the 50 moving average on this hourly, let's say, I would have had, 1, 2, 3 wrong trades essentially. Does that make sense? Hopefully that makes sense. Hopefully I covered that okay. That's why I'd be more discretionary than mechanical. You've got the ability to sort of change your mind, which you always have. I think the problem with you go down trying to be mechanical is that when you do miss the ones, you'll be really gutted. Okay. Right, guys, I think I'm going to leave it there. We're going for about 40 minutes. I think we've covered quite a lot, to be fair. We've covered this sort of dollar weakness that's come into the market, euro, dollar, pound, US dollar, pound, yen, euro, yen, gold breaching to the upside. So, yeah, we've got lots going on at the moment. Hopefully this dollar weakness may continue and it can provide some opportunities. But thanks for joining me today. Appreciate all your comments and questions. Thank you, Vincent, Ian, Ikao, Rai, Justin. Thank you for all your comments and questions, and really appreciate it. If you can leave the stream a like, I'd really appreciate that. So have a good rest of your trading day and trading week. I'll be back on Thursday at 2 p.m. So I will see you then. Cheers, guys.